So this is just a recap for Friday the 16th of February. After our major setback yesterday, we've decided to go back to simulation just to improve on a few things and before we go back into the evaluation process. And we changed the time frame from yesterday, and the time frame that we had some success using. We decided to double the time frame. We moved from 1 minute, well, moved from 30 seconds to 1 minute, and we still had the same problems early on, but we were able to iron a few things out, and we were able to gain a few successes. But even though it seemed an okay day, I'm still not happy. I do think there definitely showed me there is some work to do. So initially we took a short setup into an area of possible support, had some difficulties, got out break even, saw this surge on this bullish candle, thought we would go back to revisit the highs. We did not, turned around, got stopped out. I think this long that we weren't successful in played a part in me taking this other long. Strong bullish candle closing above the highs, and came pretty close to closing near the highs on the two bearish candles ago. Went long, and yeah, closed for a loss there. Should have probably got out a bit earlier, closed for a loss. Managed to dig ourselves a bit of a hole there. So what we did was we did on the close of below this low of this range that we built up from about 11:20 EST, about an hour or so of range. And considering the fact that we had this big move down prior to the market opening, we had some news. What is going on here? Let's see. So we've had some news over here. Let's go see what that news is. So the news took place at about 8:30. That was PPI. We had PPI, building permits. Let's see. Yeah, it's PPI. That was the yes, PPI at 10 o'clock. We also had consumer sentiment from Michigan. That was considered high impact. Yeah, that's our Michigan consumer sentiment at about 10 a.m. Eastern Standard Time. Putting the lows around that Michigan consumer sentiment, but PPI news, so somewhat partially related to inflation, had a move down into the open, had selling, just had a sell-off all the way into Michigan consumer sentiment. We've just been building back since. This trade was initially just to see how the account would function, so it's not really a real trade. And let's just get zoomed in here. So we went short on the break there, looking for that move down towards 19, got our target. Prices came back, put in these wicks here. Thought we'd continue to sell off all the way down to, I believe it was about 02 or something. I was not 02. Yeah, I was looking to retest those around 02. So I went short. Prices came back, closed above that 19, looked to be heading higher, so I decided to get out. Closed back below it, went back short. So here getting chopped up around 19, closed back below, thought we'd continue lower, went short, prices were going lower. I saw this hammer candle here, this pin bar, and yesterday it proved problematic. A couple of days ago it proved problematic, and again it proved problematic. So as I was talking through in live stream, I did say I did not like it, and what I expected happened. Saw that candle, didn't see that continuation, immediately turned around, eventually had to get out for being stopped out. So prices came up, put in a long signal. Now I was not supposed to be taking any long signals really below below 870 really. I shouldn't be taking any long signals, but saw this strong surge, a move up, so I decided to go long. Prices pulled back, hit the target that I set out, which was a level from a couple of days ago of 47. Got out there, saw prices briefly consolidate, saw another strong surge to the upside, so I decided to go long. Added, was looking for prices to head towards close to these highs here around the I think it's around. So because I've added, I was meant to get out at about 70. Initially it was 71.50, but because I've added, I decided to get out at 70.50. This consolidation through here got me a little bit worried, but eventually hit target. Strong surge again to the upside, so we're seeing prices clear out this range here, not encountering much difficulty. So I thought, well, we could clearly go higher, especially as we broke above the highs all the way towards a 96.50, which acted as support and resistance for a couple of days ago. Minor support and resistance, minor. Prices pulled back. I said, well, after this bearish candle, if we didn't see that follow through to the downside, I'd be looking to go long. Saw this bullish candle off what I thought was a bull flag here. Entered long, had some difficulties around that 96.50, but after had a surge to the upside. Initially I was looking at the 03, but pulled it back to that 02.50. Price came in, hit my target, and from there we're seeing prices pull back. So I suppose all these trades, even this trade here, while I was above that 870, the strategy requires holding a pullback for continuation up, but I decided to just take the trade very aggressively, and it somewhat worked out. So these longs through here should not have been taken, as they're not a part of the system as it's designed. So, but they did work out in my favor. So that's what I mean by there is definitely some work to still do here on this market. And yep, let's get the statistics over, get our trade performance over. So on our trade performance, we start with the summary. Those are our gains, total gross, those are gross losses. That's our commission. Profit factor is not really great at 1.3. That's the initial hole that we dug ourselves out the gate by flipping from our initial buyer short. That was a hole we dug ourselves. Percent profitable, that was from likely a result of that negative risk reward, and which was explained in our average winners, average loss. So our average winner, our average loss is nearly twice the size of the average winner, which likely accounts for this why we got a higher winning percentage. As you can see, average win-loss ratio is about 50%, 0.5. Largest winner, I was actually surprised that's bigger than our largest loss, but our largest winner, there it is, and our largest loss, there it is at 568. Look at our equity curve. As you can see, initially somewhat negligible gain, dug ourselves a hole, came back, went deeper into the hole. So we're into the hole there, pulled ourselves back to nearly flat, dug ourselves a deeper hole, and we're able to climb our way out of it to end the day positive. And if we look at the 30 minutes here, that's negligible. That was just checking the account whether it's working. As you can see here, during that lunch period, I believe 12:30, to about 1:30. I'll change that to entry time. There we go. So 12:30 we dug ourselves a bit of a hole. From there we dug ourselves back out, and that's where we've ended up here today. So as mentioned earlier, there is quite some work to do on this market. There is quite some work to do, so definitely going to be staying in simulation for a while yet. And yeah, that just sums it all up. So thanks for watching.